So in this video, we're going to be talking about CPI numbers. The numbers just recently dropped today, so I'm going to go ahead and share where we're at with inflation. Gareth Soloway and Jason Pizzino had an interview together where they shared some of their differentiating points of views on where they each think the market is headed as far as the big crash goes. And after Gareth Soloway did go live this morning and he gave us an interesting opinion on Bitcoin, which I found to be pretty intriguing. And then the big news for the housing market, it seems to be, is that everybody's talking about this 40-year mortgage. Elon Musk on the BBC talking about his experience with Twitter and the funny situation that happened on there where Elon calls the interviewer a liar, pretty much. Rounded off with Chicken Genius and where he thinks the market is headed. All right, so let's go ahead and start off with the CPI numbers. All right, so the CPI numbers came back at 5.0%. This is headline inflation. This is in comparison to the month prior at 6.0%. So we went down a full percentage point, which was very, very good. Actually, the expectation here says that it was 5.1%. So we actually beat it. And for core CPI, actually, that one went up by a tick at 5.6%, where the month prior we were at 5.5%. So overall, the CPI numbers actually came back pretty good, which you would expect this to be a positive thing for markets. However, it actually wasn't. The market actually ended today in the red. And if we go ahead and take a look at Clear Value Tax video today, where he talks about the CPI numbers, breaking news, CPI inflation falls at a record rate. He says that the reason why the markets actually didn't have a positive reaction is because the people still believe that the Fed is going to continue to raise rates after this print. And it's likely that they're going to raise it by 0.25 basis points as we head into May 3rd, which is the next FOMC meeting. And so, of course, Fed raises rates once again, and the economy already is showing major cracks of weakness. And so that's why Brian from Clear Value Tax thinks that the market just didn't have a good reaction, is because the Fed is going to continue to raise rates no matter what. But of course, the good news of it all is maybe we see some light at the end of the tunnel. The headline CPI did come down a full percentage point, so hopefully it continues on from there. Of course, the goal of the Fed is to try to get inflation down to that 2% target. All right, and the next piece of news, Jason Pizzino, if you don't know him, he's also a YouTuber, financial YouTuber, as well as Gareth Soloway, which we follow closely on this channel. They have some differentiating points of views on where they each think the market is headed. So essentially, Jason thinks that the market will have a pump, whereas Gareth is more on the same track as myself, where I think that the market is looking like it's about to have a major crash and head back down towards later on in this year. Gareth Soloway, it's the typical things, the Fed has been raising interest rates. Eventually, they're going to break something. The economy is going to go downhill. Layoffs are going to happen. And so the markets will eventually crash, creating a good opportunity to buy, right? Jason, however, he thinks that the market actually has a major pump ahead of it, that it would actually go up, which I find to be pretty interesting because, what's the reasoning why he thinks that, right? So essentially, to simplify it, is that Jason thinks that the housing market is still strong and also looking to continue to go up. And if that's the case, if housing continues to stay strong, that means that it's going to prop up the stock market as well as crypto markets in general, which I kind of find that to be a difficult thing to believe. He thinks that everybody has been saying that a major crash is going to happen towards the end of this year. But what we've seen the markets do so far is that the markets just have been continuing to kind of go up. If anything, stay a little bit choppy to upwards motion the past couple of months. So he thinks that there could be another major pump before an actual crash. So of course, Gareth thinks that that could happen sometime the end of 2023 and maybe even early 2024. Whereas Jason, he believes that there's going to be a major recession sometime later in 2026, which is, 3 years away from now. It kind of just seems a bit far away from me. I also can't completely buy into the whole idea of, even if the housing market still continues to stay propped up, that's going to also prop up the stock market and crypto. I don't see the connection there, but maybe there's just something I'm missing. But so far, I'm still in the same boat as Gareth Soloway. Gareth, he thinks that his prediction for the recession, we're not going to have a crazy, strong, deep recession. Usually when we do have strong, deep recessions, it lasts for a shorter amount of time and then we make a quicker recovery recovery, whereas he believes that, we're not going to see all-time highs for perhaps another decade, and that he thinks that this might not be a deep recession, but it might be a long, slow burn type of recession that just kind of like doesn't go quite that deep, but it lasts for a long time. It could last, anywhere from 5 to even 10 years. Personally, for me, I want it to crash hard so that it gives me a clear time to when I should buy. And then of course, I don't have to wait that long for the recovery and make some good money. But hopefully that is the actual scenario and not this long drawn out, 10-year recession, which doesn't seem fun at all. So moving on to the next piece of news, Gareth Soloway has some pretty interesting perspective on Bitcoin. So he went on his Game Plan morning live stream and he talked a lot about a ton of different stocks and stuff like that. But the one that I'm interested in is what he said about Bitcoin, where he said if Bitcoin is able to break through the current zone of where we're at now, we can see with this chart that he's drawn out, Bitcoin has been hovering at around this range here, finding support 2 times right here, and then resistance right here, right at this horizontal line. And then of course he connected this downward trending line right here and where they kind of intersect at the moment. And that's where we're at, somewhere at around that $30,000 plus or minus a couple $100. And so he says that if Bitcoin were to actually be able to break through this zone right here, let's just say anywhere from like $31,000 and above, right? If Bitcoin can able to break through that, then he said that Bitcoin could have potentially found its low back in November of 2022 during the whole FTX dump. And so I don't know if I personally agree with that. I think even if Bitcoin is able to break through this very strong resistance point, sure, there could be some upside, and I kind of see Bitcoin could potentially reaching just under $40,000, but it's hard for me to still kind of understand that Bitcoin has already found its low in $16,000 now with this whole economic situation. It's all based on the Fed and what they're doing with interest rates, right? And ever since I can remember, they've been raising interest rates ever since starting 2022, and they've just continued to raise interest rates. And it's looking very likely that they will continue to raise interest rates in May, in their May FOMC meeting. And so they're still not quite done with raising interest rates, which means that we haven't seen the worst of it all. The impacts of these interest rate hikes still haven't fully taken effect yet. And so it seems like the worst is yet to happen. And so it's hard for me to see that Bitcoin has already found its lows for only $16,000. I can imagine at the very least, we may revisit these lows, assuming that these are the lows of Bitcoin. We certainly can revisit them and perhaps even making lower lows, which is what I think, and also what Clear Value Tax thinks. It's all dependent on the Fed and the money supply. And so far, they're sucking money out of the system. All right, in the next piece of news, we move on to the 40-year mortgage. So, of course, I think most people know about the 15-year. We know about the 30-year, but now it seems to be a new thing where we're going to have 40-year and potentially even 50 and 60-year, depending on other countries. But in America, we are adding a 40-year mortgage. And this is primarily due to the house prices just getting way out of hand and becoming unaffordable for most Americans to the point where they don't even expect to be able to buy a house anymore. And so now with the 40-year mortgage, this allows for a lower monthly payment. Of course, if you're going to be extending the time, you're going to pay more as far as interest goes. But as far as the monthly payment goes, it's certainly going to save you a couple $100 going with the 40-year mortgage versus a 30-year mortgage. And so the 40-year mortgage has been greenlit by the Federal Housing Administration, where they're the ones that are in charge of running the FHA loans. Starting May of this year, you're going to be able to apply for 40-year mortgages, which, may be a good thing, maybe a bad thing. Maybe if it helps you get into your next house, then awesome. Just seems like you're going to be paying for a really, really long time. And the next piece of news here talking about Elon Musk going on the BBC talking about his experience with buying Twitter. And then there was a moment where Elon Musk confronts the reporter for not being able to provide a single example of hate speech he said he's witnessed. So the reporter said that he saw some hate speech on his feed, things that are slightly racist. And Elon pressed him a bit by asking if the reporter thinks that if something is slightly sexist, that it CPI should be banned, in which case he started beating around the bush. He couldn't really give an example. And so Elon was like, well, why did you say you saw it when you didn't see it? And then he started to try to talk his way out of it, which is pretty funny to watch. Elon pressed him to the point where Elon was like, I don't think you know what you're talking about. And Elon said that he lied. So I highly recommend you guys go back and listen to this clip yourself. It's actually pretty funny. I'll link it down in the description. All right, and moving on to the last piece of news, Chicken Genius talks about where he thinks the market is headed. So he tweets, let me be clear, simple, and precise. If you think the markets will moon, you are out of your mind. Time frame 1 year. Consensus pricing rate cuts, and we know that consensus is usually wrong. It's my belief inflation will remain sticky, interest rates higher for longer. The economy cannot handle higher for longer. Remember, markets bottom 6 to 9 months after the Fed cuts rates. While I take my profits on the way up, I'm long-term bearish on stocks. Sharing my small win today, 6K profit, playing CPI. There's always opportunities to make money either direction. I will not hesitate to short SPX at 4,200. So SPX is the S&P 500, and that he's shorting every time, I guess, it hits 4,200. He doesn't see that it could go anywhere above that, and he made a nice $6,000 profit on just the CPI print that happened today. All right, guys, that is about it for the video. If you enjoyed it, definitely show this channel some love by hitting that thumbs up button and subscribing to the channel. All right, guys, my name is Jimmy Invest, and I'll catch you in the next one. Peace.